In this week's update, 2025 sets up well, but will be quite different. The new year and a new perspective is required, and Bitcoin and quantum computing to take more prominent roles in 2025. My name is Garry Davis. I'm an authorised representative of Primary Securities, and the information presented here is general information only. Just starting with a quick perspective, and just in case I have a couple of coughing fits, I've had some pretty traumatic surgery in the last month, so I'll see how we go. But excuse me in advance if the breathing doesn't quite keep up. The Trump administration has to be a significant net positive. I've had the opportunity over the last month while I've been laid up to read a lot, think a lot, review 2024, review what happened last time when Trump was in power and made a lot of mistakes. And I expect that there'll probably be less of those sort of erratic mistakes, particularly around administration appointments. So all up, I think it has to be a net positive for the market. However, Trump will remain unpredictable because that's who he is. And that unpredictability and those knee-jerk decisions that he can make will cause higher volatility in the market. Now, that doesn't mean you need to change radically what you're doing. It just means that you need to be really more on top of your game. You need to be more clear about the game plan that you're employing. Because I think in 2025, it's going to be much easier to get thrown offline by sudden bursts of volatility. So getting as good as you can be at your craft is, I think, the essence of 2025. But having said that, the opportunities are just immense in Australia, in America, across multiple sectors. There's some big picture tailwinds that aren't going to go away no matter what happens. So get very excited by what will be on offer during 2025. Just a few of the key beneficiaries. I think small caps are really going to come into their own, particularly industrials, financials, and technology. So in 2024, we did see a lot of large caps continue on their merry way, but I think there's going to be some fabulous small cap performances. And in fact, during 2024, there were some fantastic small cap performances, and we were able to capture some of those in the Insiders Club. I expect that we'll see less of a contribution from the 2024 leaders, the Magnificent Seven, and a lot of the stocks that have been in focus for the last couple of years. Now, just a point, as always, the key reason why this Sunday video gets recorded and has been getting recorded for 17 years is that investors, I believe, need an independent and completely unbiased perspective on the market. And that's what this Sunday video seeks to do. But you do need to obtain your own investment and financial, legal, and any other advice before taking action. And as I say every week, it's actually easier to lose money in the stock market than it is to make money. So it's critical that you're organised and you've got a clear plan. Let's look at the American market. The S&P was down 1.2% for December. So with a change in the Fed language, markets definitely took a bit of a step back in December, except the Nasdaq was up 2%. So the Nasdaq definitely outperformed for the month of December. The last week was a bit mixed and generally pretty somber. Now, small caps did cop a bit of a pasting in December and were down by 8% for the Russell 2000. And it was largely because market sentiment did take a dive on the Fed language. But from my perspective, that's overdone, and the really good prospects have just become cheaper. So they've become better buys. So I'm not concerned at all about that. Now, the US dollar broke out quite decisively and is almost at 109. The 10-year yield, which is kind of curious that the NASDAQ was able to gain 2%, with the 10-year yield actually shot up to 4.6. So there's some very unusual dynamics happening there. And the VIX, first sort of mid-range, around about the 16 mark. So let's jump in and take a look at some charts. So we'll start with the S&P first of all. So on a weekly basis, down very slightly, but it was the third week of December that did the damage with the change in Fed language. Just while I'm here, let's look at the Russell. So there's the Russell that was down quite sharply throughout, pretty much throughout December, steadied in the last couple of weeks. But I'm expecting a pretty good rebound in the Russell. Now the NASDAQ, by comparison, this was basically the start of December, so managed to finish a little bit higher. But importantly, semiconductors held up very well as the semiconductors on a weekly chart. And all that's really happened here since, let's say, May, is that semiconductors have gone sideways. And given the run that they've had and some of the issues around the semiconductor industry, that's a pretty good performance from semiconductor stocks. And NVIDIA is starting to show signs that it might be going to start to run higher again. If we look at the sector basis for the American market, you can see consumer discretionary did quite well and is leading the way. Communication services, and then followed by finance, which has generally improved since the US election, as the market is expecting that Trump is going to wind back many of the regulations. And then we've got XLK sitting in the middle, and then towards the bottom we've got staples and energy. If we look at the Australian market, finance is top of the pack, followed by the IT sector, and then healthcare. Hasn't really done much over the last quarter, just gone sideways. Similarly, small caps, and then we've got energy and materials bringing up the rear. So certainly our Australian market has really only been held up by finance and IT. To the Aussie stocks, so our dollar finished at 61.57. And this really is becoming a serious inflationary issue for Australia. And the next support level really is down around 58. And unless that turns around, I can't see any way that the RBA can contemplate a rate cut with the Australian dollar down at these sort of levels. The ASX 200 dropped a couple of percent across the month of December, and as I said, it was only the banks and IT that were holding things together. Let's just go and have a look at the currencies. So there's the US dollar on a weekly basis. So we had a run at significant resistance in early November, pulled back for a week or two, but have now broken out quite clearly. So that's quite a strong recent trend since the end of September. So there is no reason why the US dollar couldn't be punching up towards 115. And that is certainly going to do some damage to the Australian dollar. You can see the big picture here. We've got important support down around 57.5. We're right at an absolute key level at the moment, but the way this chart sets up, I don't have a great deal of confidence that this current level is going to hold. So that is going to have implications for certainly some parts of the Australian market, that's for sure. And if we look at the ASX 200 on a weekly basis, you can see quite a bit of damage done in weeks 2 and 3. Turning now to precious metals. So gold finished US dollars 26.41 and really didn't do much at all, hardly changed during the month of December. If we translate that to Australian dollars, of course, with the Australian dollar having fallen as far as it has, we're now up into the 42.60, which is incredibly profitable territory. And I can't help thinking that Australian gold producers really should be doing a lot better than they are. And silver was at 29.81. If we look at the big picture for gold stocks, local stocks are just starting to outperform their global peers a little bit, but it's still nothing like what I would expect is coming. At some point in the future, it's just taking a very frustratingly long time to get there. So this is sort of a chart on a weekly basis, so we've pulled back below 30 for the time being. There's the US dollar, gold price, so not a lot of change. That's a daily chart in Aussie dollars, just continuing to trend to the upside. And a quick peek at Bitcoin. Bitcoin finished at just over 98,000. And if we look at gold stocks themselves, this is GDXJ, which is a good ETF proxy for major gold producers around the world, not the super majors, but certainly many of the rest. And stocks like Northern Star and Evolution Mining are included in this ETF. So you can see there's really nothing much doing there at all. But if we look at GDX, and this is the Australian index on a weekly basis, you can see it is looking a little healthier than the global index. Turning now to other commodities, copper was at 4.04, so still languishing, and nickel fell below $7. And crude oil shot up to 74, and there's always plenty of unpredictability about what's happening in the Middle East. So wrapping it all up, the outlook for 2025, I don't see any reason why index trends cannot continue, but I don't know anyone who trades the index, so it's probably a midpoint. But I am expecting that there will be significant rotation. There is just about every year. I don't see any reason why 2025 will be any different. So if you're expecting things that happen in 2024 just to keep rolling, then you might be disappointed. So be alert to new trends, be alert to rotations and the opportunities they present. This remains very much an individual stock picker's market, so just make sure that you're good at that. If you're not, then get some assistance. Anyone who's successful at anything almost never does it on their own. Get the assistance on the skills that you don't have. Portfolio analyst this week coming to be advised. Not quite sure how portfolio analyst is going to shape up this week, but look, I'm getting better quickly, so things will get back to normal very quickly. That's it for this Sunday video. There's more information on the website. There's my email address, and I'll be back with you next Sunday. Cheers.